Hi, I'm Jim Jubak, and welcome to my quick pick video. This week's quick pick is LICY Holding. It's a company that is in the startup stage of recycling batteries for electric vehicles, lithium batteries. This field has gotten to be it was getting hot because there's a need to recycle the batteries as there gets to be more and more electric vehicles. It's gotten really hotter because there was money in the Inflation Reduction Act for loans, for funding recycling companies. So you've got a lot of startups, and some of them are very interesting. There's one company called Ascend Elements, Redwood Materials. Both of those are private. One of the few publicly traded companies out there is LICY Holdings. It's LICY. If you look at a chart, it's not exactly been a house on fire, unless you're thinking about a house that's burning down for most of 2022. One of the things that's working against the company is that it started life as a SPAC, a special purpose acquisition company, which is the way it went public. And those have fallen after being a really hot way to do an IPO. They've become a really cold sector. And there are logical reasons for that, which is that unlike a normal IPO where you get continued backing from the underwriters who took you public, which includes large banks, which will help you organize more financing. A SPAC, once it goes public, is largely on its own, so it's got the money that it raised, but in terms of follow-on financing, it becomes a harder row to hoe. And in this environment, when you've got a lot of SPACs that have run out of money because they went public really too early, this whole sector has been problematic. But if you look at what's happened recently, you can really talk about this stock sort of starting to find a bottom in October and then hitting another low, but then recently finding another bottom. And one reason for this has been that the company recently announced, because this goes straight to the financing issue, recently announced that it got conditional approval for a $375 million loan from the Department of Energy. This would let them finish their Rochester hub. They're building a sort of spoke and hub system, whereas the spokes collect the batteries for recycling and do processing of the battery material in something called black mass, and then they send it off to the hub where they separate out the cobalt and the lithium and other valuable minerals. So they've got 4 spokes in operation, or soon to be in operation, which are capable of producing about 50,000 metric tons of black mass, and the Rochester plant, which looks like it's going to go into commission at the end of this year, would be able to process, well, all of that and more. So it's a company without much in the way of revenue. Revenue for the fourth quarter was $3.5 million. It's burning through cash, operating expenses of $39.4 million. So cash burn rate is about $60 million a quarter right now. They finished October with $578 million in the bank. If they get the loan, it's clear they'll be able to get to the Rochester plant being in operation, and that means a lot more cash flow. So here is a stock for the patient and the strong of stomach. I like it at this price. I owned it at a higher price. I'd certainly be interested in buying it here. Depending on where the market as a whole goes, will determine where the stock goes, because it's a risky stock. So in any downturn, it will show some of the risk. But right here is an interesting entry point because I think we're starting to finally see some traction in terms of revenue from the company. So thanks for watching. If you like this video, please give it a thumbs up. You can subscribe to my YouTube channel for free. That way you get notification when we do the next video. We're doing about 3 a week, not always on the same day. Did I mention signing up is free? Oh yeah. And also, speaking of free, my free site, jubakpicks.com, has 3 portfolios, not the one in which LICY. That's on my paid site, jubakam.com, which has a lot more of options and really risky long-term plays, as well as ETFs, plus some regular down-to-earth portfolios. So thanks very much for watching.